Alright guys, welcome back again. So getting right into it again, we can see that we had British pound, and we look at the British pound versus USD. We just trade down to one standard deviation during London. We had some news coming in. The news driver today for London. Let's refresh the page. So the manipulation that came into the market today, the news was bad, so it's still tying into our analysis that we had on the weekly chart, where we're expecting the lower prices, but the first low hanging fruit could have been our daily objective for the first liquidity pool here to be traded into. So that's still on the cards for this week, and we're looking at these lows and subsequently these lower at the bottom here. So we're just looking at how price traded down into the first standard deviation at London. So typically news drivers tend to push prices down to the third, and as it can go as low as the fourth standard deviation, but we see that at the second standard deviation we have the daily liquidity pool, sell side liquidity pool, last week lows, and we have a swing low also here Thursday. This swing low, relative equal lows, and this swing low, I would use this box here. In blue we have these swing lows of last week. So every swing lows, under every swing low, they would have a liquidity pool that price will be drawn to. So we just want to see price trade down. We want to see if price make it all the way down to the second standard deviation and take these relative equal lows. Just clear this. The nearest, we have a swing low. We have two swing lows here, relative and also relative equal lows, but this one is the nearest one. Actually, this low here is the nearest one, but they're relatively equal. So we would like to see the market trade down into this liquidity pool, and we will more than likely it would want to go down as low as here. It can go down as low as here. So our standard deviation one, standard deviation 2, set that as the just at the bottom, and we put this at the top so we can just have some clarity, so we can see what we're looking at. And the third standard deviation, I'll just write it in one time because it can't go as low all the way down to here. But we really just expecting to trade on into the daily such liquidity pool and expect a rejection. Well, we expect for it to re-engineer liquidity sell side and then trade to the upside from there. But we also have CPI news at 8:30 today, and I typically don't take a position until CPI is over. because CPI, non-farm payroll, and FOMC are the two news drivers I tend to stay out of the market. That tends to keep me out of the market, and after those news drivers is when I like to engage. Because I don't really like to take a position ahead of it, but because of how this week was, we had a successful week so far already. Your PC just somebody has logged in on your account from a different device. If this was intended, click the welcome button and you can continue working from here. If not, okay. Okay then. Don't know what caused that. So, as I was saying, we were focusing on the second standard deviation with the daily low hanging fruit objective as the draw, and I don't want to take a position before CPI, but considering we already hit our weekly targets, all my positions I'll be taken for the rest of the week would be very small entries. So I'll take a position, I'll just risk 50, same 20 pip, yeah, we just risk 100 with the entries, but everything would be under the same standard deviation strategy, and yeah, we'll see if price would want to get down to underneath this swing low. Well, we see we trade under this swing low and this second swing low here. That will be the draw, so we'll see. So it could come down anything ideally between 1 and 2. So what I noticed also that price tends to go about 10 pips under, yeah, about 10 to 15 pips under our targets. So if our low hanging fruit target were the lows of Friday and Thursday, with the nearest one being Friday, 10 pips, 10 to 15 pips under it. So we can anticipate about here. Yeah, price could come down all the way down here. So that'll be within our 1 to 2 area. But we'll just drop to a smaller time frame to get a little closer to price to see exactly how it's trading. So we see what I consider this to be is the re-engineering of sell-side liquidity after it purged it, after price trade down and purge the liquidity. So, and what tends to happen, so you don't want to be too hasty with the entry. Most times when it trades down to the first standard deviation, it will give you a rejection, and it looks as though price want to trade off immediately. What I noticed with my studies is that the first, after it trades down into liquidity pool, this will be being this current week's low, because the low of the week so far was Tuesday. It traded down into it, so it would have purged the sell side liquidity, so it have to re-engineer it. So this run up and subsequent dip down back into it is how the market re-engineer the sell side liquidity. So the first breakout typically, from my studies, it'll be fake. So what I noticed, because I used to always want to get in early, and get in early and take a position, and most times after the liquidity is purged, the market has to re-engineer the liquidity. So that's how I end up learning patience and wait for the secondary dip down again to catch any breakout. It like to dip down again and go about 5 pips underneath the initial low, and then it takes off. But again, how we were all looking for last week low or Friday and Thursday to be traded to and through, and we're expecting it to reach all the way down to the daily liquidity pool. We'll just be patient and let the market do its thing. We're still within our kill zone of London. Time right now is 2:26, so we still have a lot of time. So around 3 or 4 o'clock, this liquidity pool should be targeted, and we'll activate. Let's take a look pan over to Euro chart. We see that the big price action that we had during the evening session at 4 p.m. we knew this would have more than likely trade back to fill in the imbalance. This sell side imbalance, this buy side imbalance, sell side inefficient, sell side imbalance, buy side imbalance, sell side inefficiency here. ICT also dubbed that a BC. It's a void of sell side delivery, the black candles. You could already anticipated this to be a retracement to fill in here. We see Euro has been bullish this week, even though we are in a bearish on the line bearish setting. We in a sell model at the moment. We were already anticipating some relative strength coming in the market this week for Euro. See over here, we were anticipating this week, second week of September, to have some strength. Anticipate strength in September, and so far this week we have seen that Euro has shown us signs that it wants to give us some strength. You go back across the British pound. Alright, so what I'll do, I will just allow price to do its thing, and I would start back the recording when it gets more to an area of interest for me. So I'll catch you guys back soon. Alright, so we can see that price did in fact trade down to the area of interest into last week's swing low on the forward chart. Trade down into it, and I think I will be getting ready for an entry around here. So we see a subsequent run on stops, so I'll take an entry by the markets. Ideally, entry would have been at the entrance of this fair value gap, but again, I was explaining what I was looking at. Risking just 100,
because again we have CPI news this evening, not this evening, sorry, at 8:30, and typically I don't trade before CPI. I wait after CPI because price tends to be price would tend to be a little unpredictable for CPI, even though we have an idea of where it wants to reach for. I would definitely be more comfortable to take the entrance after CPI. But again, we have an area where I believe price would respect for this period in time. So low entry, risk and low with a higher probability, with still high probability. Again, as I said, the first entrance on the standard deviation tends to be a false breakout, I realize, especially when we have especially when we have a certain news driver coming into the market for that particular day. So I like to wait a while and see, wait for the breakouts and get underneath the buy underneath the run-on stops. London love to have a run-on stops, and again I use this strategy for intraday. So it limits the amount of trades we take per week, and also if I didn't have participated in the market and gotten what we have gotten, basically the success so far this week, my trade would have definitely been the 2 lots, and I would have just looked for objective over these highs and maybe this high. So I would have waited for the entry to be here, and I would have gotten out and closed the entire trade over this high. Or no, I'll take a portion at this high or this high. I'll take a partial at this high and try to see if you wanted to get above this high because of the news driver. Because you can also look at the market as it creates incremental small ranges. So we have a swing high here and a second swing high here. So we have a range of liquidity to work with from here. Not range of liquidity, sorry, but a range that the market creates. So we have a small fractal here of a range, and this is the range we're working with here. So if you wanted to buy within this range and then capture price action in this range, you would want to look at these highs, this high, and this low. So this is the small range we're working in, and we low hanging fruit objective would be to target these highs here. But again, it's a small lot size. I took half of a standard lot, and I just trying to add on to our success already for the week, and also keep on demonstrating the strength of standard deviation, how you can find setups that will give you $10 pips, 15 pips, 20 pips, because you could definitely make a living with 10 pips and over. You could definitely make a living with 10 pips and over. So this is what I'll be demonstrating, and what I would hopefully, give new beginning traders something to study and add to their journal as they progress and try to find a strategy that they could rely and trust going forward. So it's have a lot of strength with it. And I know as a new trader, when you're starting, you kind of be intimidated to enter the market. So this limits the amount of trades you take, and make every trade a very high probability entry, as long as you know you're looking for. And these videos are intended to give you a area of interest to look at for your studies, and to focus your attention onto those areas now. So that is what the intention for the channel is, the goal for the channel. And you know, hopefully whoever stumble upon my videos can put that into their journal and just look at these areas that have been highlighted. Again, ICT, the core content is one of my favorite, if not the most informative series of videos he have on his page. And also the videos of like where he talk about things to stay away from, things he wish he knew earlier, and those sort of stuff. Those videos help me a lot in my development. And the Twitter spaces, they help a lot. I listen to the Twitter spaces more now than anything, because I found my strategy a while ago, which was this year. So I'd like to just listen to him talk about his life and those sort of things, because I find it have a lot of importance, and it will benefit people after you find and back test and journal, and you have something they can trust. The Twitter spaces and stuff, really, it kind of like just hearing somebody who care for you and have no interest in like making money from you. He more focusing on helping you make money from the market. I really like that type of care and time and effort that he put into his students and his work and his craft. Like that's something that rare, like that things I look at. So see Euro selling off, showing some relative strength as well. This move I would just really want to capture at least 20 pips from this move, so over these highs, and I would more or less collapse the trade, because of how we have CPI later today. It's not a ideal entry because of CPI later, but we still see the strength in it, the entry. So I will just move the break even at this point. So we don't have any, actually I'll move a little into break even, so you don't have any we move at break even, don't have any risk on. Actually, I don't think TradeView introduced trail stop loss as yet on their website. If they did, somebody could just leave a comment, but I'm not sure, or I don't know how to find it. But if I could have set a trailing stop loss, I definitely would have, and really look at the market after CPI. But now we have no risk on the trade, and we have $20 locked in. But again, just demonstrating how we can find strong setups. I can't really take off anything off the trade because it's such of a small size, but I just wanted to show again how we can find setup that will give, at least 10 to 20 pips. Very, very strong. Actually, just to highlight the strategy, I would I'll move my stop loss to right underneath the lows, because it typically is 20 pips I use. So I will just move up to 10. I move up to 10 because even if it stopped me out, I'll just illustrating something at the moment. So we have reduced our risk and we are allowing it to trade up. So I would allow the price action to pan out and come back later on. Right, so we see we just broke over the first swing high. So let's choose the low. So there's a breaker here, trade it into choose the low. So you definitely could expect a retracement back down to go lower. So Again, I just wanted to illustrate how we could have gotten about 10 to 15 pips. So what I'll do, I'll just close off the trade here and allow for CPI news to come through, and after CPI we'll activate. Actually, I'll move the break even so we don't have any risk on the trade. I'll move the break even. I'll enter break even. We'll allow the trade to pan out. I already expect a retracement back down, but this move into right here. This is a break of structure, not a market structure shift or anything. This is a break of structure of the internal range. So I've seen this happen many times, so I can anticipate this to trade back in at the breaker because we're still bearish, and it will come back down as I stated and clear out the lows underneath here. Again, CPI day price action tends to be a very tricky. So if this come back down and trade back down there, it definitely wouldn't surprise me. Seen it happen a couple times, but again, I just wanted to illustrate how sometimes how to navigate also through entering at least deviation in London, because London could be very tricky to trade, you know. But I just got accustomed to trade in London, so kind of understand London characteristics. So this breaker structure right here, that's typically label the breaker structures in orange. This breaker structure here, with it now price would now seek to come back underneath these lows. Is a swing low here, 50-minute swing low right here. So if it comes back down, it definitely wouldn't surprise me. Seen it happen a lot. So it definitely, I don't know what you're looking for when you're using the deviations. Know when to enter. It's not like an immediate, oh okay, enter now, because after the purging of liquidity, it has to re-engineer the liquidity that just got traded through. So not, if you don't understand that part, you might end up getting stopped out or having to sit through a lot of drawdown because you're a little too hasty with your entries. So it definitely should give it time to re-engineer liquidity, and don't look for the like the best, most precise entry. What I mean is that you're not hasty to get in, because you would realize if you move like that, you will have a lot of losses, or at least you have a lot of sit down through a lot of drawdown, you know, and nobody really like that. So the best thing is to do is just to allow price to trade down into the area, re-engineer liquidity, and while you're doing your studies, you'll understand that price love to do this here, where it trade down, give you this cookie here, go up, come back down, which would be this price action here. Then you say, okay, there's the real entry. You go up, you might trust this one, you might want to get buy in this one, and then you have to live through this coming back down quickly. And there's a lot of, you know, if you don't have the mental toughness, and you wouldn't really have it in the beginning, trust me, you don't want to have to live through that. So might as well just learn to wait and understand the season and the higher time frame perspective, and then just wait for this here. Sometimes you will get as it hit it go up, but really and truly, it would serve you better to just wait for the false breakouts and then you gain under. This trend line here just to illustrate a stop hunt. I believe this was the stop hunt, and quote-unquote perfect entry would have been exactly as it traded on into the box here. But again, I was illustrating that point. So I ended up buying when it was trading back up, and I get fill here. So this would definitely be an area where price would want to revisit to fill the imbalance. So I could anticipate a retracement at some point back into here. Maybe CPI would send it straight back down. But that's not my business at the moment. My business at the moment is this range that was created between this high here and this low. And we want to see a trade through this high. We have a smaller time frame breaker here. All high act as support, but we have a higher time frame bearish breaker here. So if we go up to the higher time frame, we can anticipate price to trade up about half into here and then retrace down. But if it does that, it definitely won't surprise me. So it'll be kind of tough to take a partial with such a small entry, small position, but it was just to illustrate again the trading within this range and still gain at least 15 pips. Yeah, could definitely make a living with that. So if you notice this price action here, it's looking like it's making the same thing here. So we can anticipate a retracement about 10 pips underneath, about 5 pips underneath this, and it should hit my stop loss that move to break even. If it does retrace under, yeah, more than likely would tap into the stop loss. But we'll see if we have any advancements over these highs before that happen, because we still have an imbalance here. We have a sell side and buy side investment. We have a CB here to fill in, but we also have a higher time frame bearish breaker over here, these Tuesday lows. So one thing I definitely recommend is just spend time watching the candle paint, and you will understand a lot about price from just doing that. But again, I don't want to make these videos too long, so I will end this again and see how price pan out after CPI. We can see that we did trade over the swing high. So even though it's a small lot size, I'll still take a partial. I'll close off to lock in some of the profits. And again, even though it's a small lot size, this is exactly what I would have done had it been the 2 lots. So I'll just illustrate that even with 50 lots, sorry, 50 lots, half of a standard lot, we were still able to capitalize, and we locked in $82 every. So my cat just came to visit me. Can I close back the door, son? Yeah, so again, how I view the market is we didn't lose anything. It's not about how much money you make every day, but it's how much you can limit and reduce risk while growing your equity. That's how I view it. So we were able to capitalize on a range of 26 pips. So there's a lot of strength in the standard deviation. It allows you to really be confident in your entries. So we'll come back after CPI, and we don't have to trade again for the week because we definitely made our quota. But I was just again demonstrating how you could use a weekly strategy that encapsulates the weekly and daily range as an intraday type scalping for higher probability, very strong odds in your favor. So this will be it for today, and I'll see you guys again pretty soon.